Hi, welcome to this week's client webinar. Great to have you along once again, joined by a very familiar face, Mark Brown. Hi, Brownie.
Yeah, good to be here.
We're right in the thick of result season, aren't we? And obviously we're waiting for what's going to happen at Jackson Hole. But yeah, result season is progressing along at a rapid clip. So Spark, that's a big result to come out this week. How did you see that, Brownie?
Yeah, so you're right. We're smack bang in the middle of reporting season, and so it's all go really, because of course, as we've said before, it's both New Zealand and Australia reporting. Spark was a good result, very solid. Had 7.6% NPAT growth, which is positive. But of course, the real key was the improvement in the dividend. We've been getting 25 cents per annum since about 2016. Remember, in the early days, it used to be a portion of it was ordinary and a portion it was sort of a supplementary dividend and then we grew into that as a full ordinary dividend. So the whole 25 cents became a full ordinary dividend, because I think initially there was only 3 cents of additional supplementary dividend. But the good news really is that they're predicting 27 cents for 2023, which is positive for people who are there for the yield. In terms of the result, mobile was a standout. Mobile revenue grew 5.5%, and remember, this is in a period where we didn't have any global roaming, and of course, global roaming is quite significant for mobile services revenue.
Okay, and just one thing on that dividend, is that that's all funded out of free cash flow? Is that?
Yes, there or thereabouts. They've changed the definition of free cash flow to not include working capital, which makes it slightly easier and also far more stable, because of course you can have quite big swings in working capital in the business. Okay. So that we are moving to a fully, but it becomes less obvious or less of a concern now. Of course, as you know, they're awash with cash.
So they're talking about cash. Then obviously they've monetized their tower assets, their passive infrastructure. So what's happening there? Are shareholders getting their hands on it in terms of the money flowing?
Yeah, fair question. I mean, so it's 900 million. Remember, so they sold 70% of the telco assets. So that deal will complete in September, late September, October. But I think we're waiting for OIO approval now. But that's 900 million. 350 million of that will come back to shareholders by way of a buyback. And so they're a bit opaque as to when and at what levels they'll buy back shares, but it'll be an on-market buyback, as we've seen many companies do with spare capital. But the rest will be retained. So there'll be 350, as I said, for an on-market buyback, 350 million for future growth capex, and then the rest, which is clearly 200 million, will be retained to pay back debt. Because of course, when S&P looks at them, they capitalize up those leases. Of course, this is a sale and a leaseback type of arrangement, and so those capped up leases add to the debt burden, and of course they're trying to retain an investment grade rating, albeit slightly lower now. They've indicated that they're going to a BBB- investment grade rating.
And just quickly, the share price reaction. I mean, Spark shares that had a very good run, hadn't they?
They've had a hell of a run. That's quite right. And actually, on the day, I was concerned actually at the start of the day that the market had been expecting a bigger return of capital through a big, either through a special dividend or a bigger buyback. But it's been positive on the day. So I think investors are taking comfort in the future guidance, the better dividend, and the fact that there'll be a $350 million buyback at some point.
Great, and great outcome for the Devon Dividend Yield Fund, which obviously you run, and see a number of other Devon funds. Another name, Freightways.
Yeah.
Actually, interesting. You've got Freightways and Main Freight, but they're actually quite different, aren't they? So, what briefly is Freightways business?
Oh, so yeah, completely different, really. Because of course, Main Freight is global shipping related. It's LCL freight, which is less than container load, long haul, and a lot of freight forwarding. Of course, remember we've talked about this before, that air and ocean, which is really freight forwarding, is a big portion of their business now. With Freightways, it's just a courier business. in New Zealand, and then it has an information management, which is document storage, document destruction, and increasingly other new businesses in Australia, one of which is Shredix and a waste removal and a medical waste business. So yeah, solid result from Freightways. Interestingly, they've acquired a new business. So this will be their first, whilst they've got a number of businesses in Australia, they have no courier business in Australia, never had it actually. But they have just purchased Allied Transport in Australia. And it's those beautiful acquisitions where it's not from private equity, it's not being dressed up for a sale. This is a conversation they've had with the family that owns Allied. They've had this ongoing conversation with them, or this dance, if you want, since 2005.
Yeah, that's amazing. Yeah.
And so the family of now, the owner is 78 and ready to move on, and is quite happy to sell to Freightways. So that deal is around 160 million Australian dollars, and the family will be taking 100 million in Freightways script and 60 million in cash. And so, look, I think it gives them a beachhead in Australia in that portion of the business they're really good at, which is the courier business and fast freight, and be able to, and it's actually in many states, so they'll be able to bolt on new acquisitions in that space, and of course bulk it up over time if they need to or want to.
Excellent. Okay, well, solid result. Just quickly then, EBOS. Did you have any view on?
Great result from EBOS. Pet food going gangbusters. What's not to like? It's a solid business. They do pharmacy distribution and pharmaceutical distribution really well. They're the preeminent player in that in Australia. Continue to win market share. Their own labels of Black Hawk, which is in the pet food business, is still a preeminent player in that field, and they're just moving that premise to their own state-of-the-art factory, so they can have product development and improve margins, and that looks like it's going well. And that factory is actually now delivered and beginning to produce products. So really good outcome. Remember, they bought the life healthcare business, which is only slightly represented in this year's financial reports, but will be a significant contributor next year to the earnings growth that the market has for EBOS. So yeah, they're really good business. We look forward to seeing them again. They've got a strategy day coming up in November, so it'll be good to get out there to Australia and perhaps see some of the facilities.
Great, we'll pick up on that one again then, I'm sure. We'll look, 3 good results, and yeah, thanks for recapping on those, and thanks for your time again today. They've been very busy digesting all these results that are coming out pretty regularly. So we'll leave it there, but thanks for tuning in once again. Do have a great day, do have a great rest of the week. Any questions you've got for any of the investment team, get them in through this forum, through the webinar. Otherwise, we'll catch you again next week. Bye for now.